Time now for the morning trade. Home Depot reports its earnings tomorrow morning. George Tsilis is with us. Good morning to you. I would love to get a market thought from you and also what the street is expecting when it comes to Home Depot.
Well, in general, the market, I think this Moody's downgrade is really sort of a non-issue. To be honest with you, we've seen this in the past. The U.S. government's Treasury debt is a premier debt out there, irrespective of their downgrade. So I don't agree with their downgrade. They did it. They're following Fitch and S&P over the years, but I think it's just a buying opportunity on the dip. It doesn't mean the markets can't fall another couple, 2, 3, maybe even 4%. To the downside just because we're already a little bit overextended. So this may be a catalyst for that short-term pullback, but nonetheless, I think we would have seen a pullback irrespective of their call.
Yeah, understood. I saw RBC felt a little more positive on Home Depot than it did on Lowe's, for example. May see some rise in sales, but the tariffs could weigh on so many of these names. What are you watching?
Yeah, you're right. If you do look at the EPS, I mean, first off, we can talk about that. In terms of the estimates, they're expected to be slightly lower by about 1.16% at $3.60 compared to the same quarter last year, around $3.63. And sales are still expected to grow higher by about 7.9% to $39.3 billion. But if you look at their comp sales breakdown, total system-wide comps are expected to be higher by about 0.3%. So just fractional increase, but if you look at the USA comps, they're expected to be down by 1%. So total system comps higher, USA down. So that really is just a function of what's happening with tariffs, import price constraints. The question is can they pass it on to the customer? You saw a lot of, the Trump administration, actually Donald Trump talked about Walmart saying, you guys deal with the tariffs, don't pass it on to the customers. I think Home Depot wishes they can. Consumer sentiment has been relatively weak, so that might be, challenging from the standpoint of price sensitivity from the consumer standpoint. But if you do look at the growth rates for Home Depot going forward, based on consensus estimates right now, this certainly could change based on the earnings call and, of course, top-line sales guidance and earnings guidance. But the sales guidance is expected to be rather modest at around 2.5%. Earnings guidance right now, or EBITDA growth at around 3.5%. So we're talking mid to low single digits in both growth in earnings and sales going forward. But, the stock is down year to date, still about 3%. It hasn't reclaimed the 200-day moving average. And it's trading right now between 23 and 25 times earnings based on this year and next year's earnings. And that's typically historically where it is. And profit margins are down about 1% compared to its historical 5-year average. So what I see here is really an issue with operating leverage, pricing power, and higher cost of goods sold. Their contractor business has done remarkably well over the past couple of years, but I think their core hardware business may be constrained based on consumer sentiment as well as the tariffs, which cut into margins.
So it's interesting because as you were speaking, I saw some headlines pertaining to Bessent and his conversation with the head of Walmart, CEO Doug McMillon, that now Walmart's saying that they would absorb some of the tariff impact because they really were on the receiving side of Trump's ire when he was saying, eat the tariffs, don't, you made billions of dollars, don't raise prices on your valued customers, and really dishing it out to Walmart. And now Scott Bessent did cite a conversation with the CEO of Walmart, who now says they'll absorb some of the the tariff impact. So that's interesting because you said they have some pricing power. It's really going to go which ones have the pricing power to, sort of eat some of the costs or not. And how much will the consumer spend at Home Depot, at Walmart, we just finished talking about the cruise lines and the record bookings people are spending there.
Yeah, definitely. I think you have to look really right now in terms of, the consumer basket. Obviously, price sensitivity to things like food. Walmart, sells about 60% of their sales are food-based. So they obviously can raise prices there because people need food. The issue is Home Depot when it comes to, a little bit more on the discretionary side. The challenge is, can they raise prices? And that would be for things like remodel projects and DIY projects. So, that becomes a challenge for Home Depot. And plus, again, a lot of their hardware comes from places like China, which we know that the tariffs are going to remain. They're obviously going to remain lower than the initial, big percent tariffs. But nonetheless, it's going to be a challenge for Home Depot to find a way to pass it on in which products can they pass it on versus not. But we'll see what they say, because, like I said, if you look at the earnings estimates for growth in sales and earnings, they're quite low relative to their averages, and the profit margin is also already down this last year by about 1% or 100 basis points compared to their averages. So we'll see. I think pricing power is really key. Can they pass it on or not? And that's really going to be key in terms of their guidance.
We'll see how people are feeling. In the meantime, we're going to go ahead and trade it. George Tsilis, great to see you on this Monday. Thank you so much, and I'll see you later in the show. We'll have a market meetup panel. And Scott Bauer is with us, CEO of Prosper Trading Academy, to talk about an example trade here for Home Depot. How would you go about that? It's at 378.80 right now.
So when you look at technically, really the stock is in the middle of no man's land. There's not any big resistance, support anywhere near that I see. I actually think that implied volatility, the option volatility, is too cheap going into this print. Typically, Nicole, going into earnings, I like to sell some of that really expensive premium. I think it's too cheap. So what I'm going to do is I'm going to buy an iron condor for this week. That means I'm buying both a put spread and a call spread. I don't care what the stock does on the print, move. So I'm buying this week's 360, 350 put spread, and I'm also buying this week's 385, 390 call spread. I'm going to try and do that for about $3.50 or so. And I am looking for a big move. End of the week, the break evens on this would be 356.50 on the downside, and on the upside, 388.50.
Okay. Well, thank you for that. I mean, we're going to be getting a lot of news from these retailers, and this is a good example trade here. How do you feel about the market, which just moments ago I was just checking, we're right around the unchanged line, not even 1% off now, just like, a third of 1% lower. We're going to maybe go positive momentarily, even though most of the sectors today are lower. I mean, financials and industrials are the only sectors that have green arrows. I don't even know how we're coming back in this way.
I know, I don't either. I'm a bit surprised, and not so much that the sell-off is not there from the downgrade, but looking at what the bond market is doing and seeing that 30-year back, way touching 5%. The 10-year was up over 4.5. To me, that's where the concern in the market is. So I'm really surprised that we did make this, this rally back here. And like you said, we're almost at the unchanged area here.
Yeah, names like Moderna, Take-Two, Dollar General, GE Vernova, United Health leading the way. We have a lot of story stocks that we're following. Of course, Walmart is front and center with the president really telling Walmart, eat some of the costs. You made billions.
Yep.
Don't raise prices on your valued customers. Of course, I'm sure they have a good, strong rebuttal, but President said that they will actually absorb some of the costs. I mean, are there any sort of stocks or sectors that you're watching in particular?
Yeah, I think retail is huge, especially with Home Depot, Lowe's, and let's see what the other ones do here. I think it's going to be incredibly important to see what they report in terms of guidance. I don't expect them to say much more than we just don't know what the tariffs are going to do to guidance. But the retail marketplace here, and if we continue to see some news that maybe they're going to eat some of the tariffs, and I don't know that's the case, that certainly should add some investor confidence, which we know has been almost at an all-time low right now in terms of consumer confidence.
Yeah. And folks, for those of you following United Health, which obviously is down in 1 month, down 35% basically, is up off the lows of $248. Today it's at $300, well off the highs of $630. Scott Bauer, CEO of Prosper Trading Academy. Great to see you this morning. Thank you.
You too, Nicole. Thank you.